Hey everyone, welcome back to another recap podcast from SNXweave, where we give quick weekly recaps of news and important updates from the previous week from the Spartan Council and core contributors. Let's get started. The Spartan Council had a bonus meeting last week to discuss the new proposal to acquire Derive, formerly Lyra, and expand Synthetics derivative offerings. This acquisition is time sensitive, as Kane highlighted that many older DeFi perps projects have faded out in the past couple of years, with Hyperliquid currently dominating the market. However, he believes there's a brief window of opportunity to capitalize on minimal competition before other exchanges come online in the next 6 months. Kane explained that this winner-take-all dynamic is especially prominent in DeFi, where a number of protocols, including Synthetics, have maintained the top spot based on incentives being offered at the time. However, the landscape is shifting, and he believes the future of DeFi on L1 might start looking more like the centralized exchange space, where strong demand from users will drive competition. Even with all of the UX improvements, the biggest roadblock for high-volume traders is still bridging and liquidity issues, which is why the Spartan Council has opted to pursue an L1 perps exchange, and Derive would become part of the V4 Synthetics suite on L1. The acquisition of Derive would mark a significant shift for Synthetics. Over the past 6 months, Synthetics has transitioned from a B2B model to B2C, focusing on bringing partners and customer-facing protocols back in-house. The proposal includes an exchange ratio of 27 DRV to 1 SNX, representing an approximately $27 million valuation for Derive. The deal, however, would be funded by minting 29.3 million new SNX tokens, and would therefore need council approval from both Synthetics and Derive. Once acquired, Derive would become part of the Synthetics suite in the upcoming V4 update on L1, starting with perps and eventually expanding to options to build a comprehensive derivatives exchange. With futures and options added to the platform, Synthetics would be better aligned with top centralized exchange offerings, providing a more robust and competitive ecosystem for users. There was a question from the audience about why Synthetics chose to acquire Derive rather than simply licensing its tech. Kane made it clear that licensing would introduce unnecessary risk, and Bert emphasized that the acquisition would also include the current Derive team, which would be pivotal in helping build out the Synthetics derivative products. Additionally, Kane noted that while Derive's technology is impressive, one of the biggest challenges they've faced is getting market makers on board, and he expressed confidence that Synthetics could help with this, as he has already engaged with some interested market makers for the L1 launch. Lastly, in response to questions about what value Synthetics could offer Derive, the Spartan Council emphasized the power of brand recognition and the ability to create the right incentives to build liquidity and capture trading volume, which is something Derive has struggled to achieve independently. By bringing Derive into the Synthetics fold, the combined team would be well positioned to deliver a unique trading experience ahead of any competitors on L1. The acquisition would also significantly accelerate the delivery timeline for V4, reducing the time from months to just a few weeks. With this speed, Synthetics would be able to launch the new offering quickly, capitalizing on the current market conditions and positioning itself as a dominant player in the derivative space. And that's it for today's updates. Be sure to check out our weekly recap blog post, share this podcast link, and let us know what you think and what you'd like to hear more about from SNXweave. Thanks for listening.